Hey, what's up everyone? Welcome back to another video. And in today's video, I'm going to be explaining to you how to set up and how to use the Fibonacci tool. I will be doing this by giving you 3 different examples. One on here, a drawing, and some live chart examples. But before we get to the video, check the link in the description for the full course and get 50% off if you use the top link. So the first thing we need to do, let's get rid of this. The first thing you need to do is to set up your Fibonacci tool. So you draw it out like this, then you double click on it, you go to style, and then you set it up in this way, just like how I have it here. We have the 0.38 point, the 0.618, the 0.5, the 0.786, the negative 0.272, and the negative 0.618. Make sure to set it up just like how I have it here. So we use the 0.382, the 0.618, and the 0.5 as points that the retracement may bounce off of. So we expect the retracement to bounce off of these 3 points for an entry, while the 0.786 is used primarily for placing your stop loss, primarily, and the negative 0.282 and the negative 0.618 are used as take profit points. The first take profit point will be the negative 0.272. So then you should look like this once you finish setting it up. So I'm going to be teaching you now how we draw the Fibonacci tool. If price is going down and you're looking for a retracement for a sell entry, you draw the Fibonacci from the top to the bottom. So you draw it from the previous peak all the way down to the bottom. Well, if price is going up, you do the opposite. You draw it from the bottom to the top, like this. So let's jump right into the examples right now. Well, first I'll be explaining to you how we do it, or how we draw it exactly. I'll give you this first example here. So let's say price is going down. So we have price coming down here, up, down, up, down, up. So let's say price is going down in this example here. Price is going down, forming lower lows and lower highs. In order to draw up our Fibonacci, let's say we want to draw Fibonacci on this impulse move right here for retracement for an entry right over here. Let's say we want to get this entry, so we draw Fibonacci from the previous peak, which is up here, the previous retracement. You draw it from here from the top up here to the bottom of down here, to the bottom of the impulse move. Then we wait for price to retrace up and bounce off of one of our levels, and in this case it bounced off of a 0.5 level, and it got to the negative 0.272 take profit. Okay, let's say we want to look for the opposite. Let's say price is going up. Make sure to watch my video on market structure to understand this. Let's say price is going up. Okay. Let's say price is going up in this example here. And we just had this impulse move going up. And we want to and we want to capture a move on the retracement that is about to happen. We draw our Fibonacci from the bottom over here to the top of the impulse move, and then wait for the retracement and bounce off of one of our levels. And in this case, it almost got to the 0.5, but it bounced mostly off of the 0.382. So our entry would have been on the 0.382, and our take profit would have been at negative 0.272, which is up here. Hope you understand that. Let's go to our second example, which is over here. I have this drawing up, and as you can see here in this drawing right here, price is going up. As the price came up from a high, dropped down from the low, went up from a higher high, went down from a higher low before going up back. And in this case here, we have our impulse move, which is this move, these moves right here, this move, let's put in a different color so you don't get mixed up. So we have this move, let's put it in green. We have this move right here, this impulse move, we have another impulse move here, and we have our last impulse move up here. And our retracements now is right here. I put it in red. These are our retracements. See, we have our impulse move right here, here, and here, and our retracements in this uptrend. Let's get rid of all of this. Give me a sec. So in this case, let's say we just had this move, this impulse move right here, and we want to get in on a trade, a buy-in trade. First thing we need to do is draw up our Fibonacci from the bottom of the impulse move all the way to the top of the impulse move before price retraced, like this. And then we wait for price to pull back before bouncing off of one of our levels or 3 levels for an entry, a buy entry going up. And in this case, price went down almost towards 0.618 point, but mostly off of our 0.5. So our entry would have been at the 0.5 level right here for a buy going up to our take profit. And so let's say we didn't catch that first move. Let's say we didn't catch this first move, and we're looking to catch this next one. We do the same thing. We draw our Fibonacci from the bottom, or the starting of the impulse move, which is really the end of the previous retracement, all the way up to the top of the impulse move. Then we wait for price to retrace down, and as you can see, price came all the way down to our 0.618 point before bouncing off of it and going up for a buy trade up to our take profit, which is negative 0.272. So that brings us to the end of our second example. Let's go into some chart examples now. I will change this. We're on Euro USD right now, and as you can see, what have been happening on Euro USD for the past couple months is that price is coming down. And if you look close, you can see that from just market stretch, we can see that price came down. Let's put this in black. You see price came down, went up for high, dropped down again for a lower low, came up for a lower high, dropped down, for a lower low, came up for a lower high before dropping down again for a lower low. So you know price is dropping down based on the market structure. Price forming lower highs and lower lows. Price is obviously trending downwards. So let's say let's say we're here. Now let's say we just finished this impulse move downwards. We just finished this impulse move downwards. Let's say we just finished this impulse move downwards, and we want to get in our trade. First thing we need to do is to draw up a fib from the top. You drop a fib from the top of the impulse move all the way down to the bottom of the impulse move, which is over here. And then you wait for price to retrace back up to one of our levels. And as you can see here, price retraced back to our 0.382 level before bouncing off of it and dropping all the way down. So let's say we were looking for a trade, a short position, and we entered the trade at the 0.382 level, and we had our stop loss at the 0.786 level, and our take profit at the negative 0.272 level. As you can see, price went down, hit our take profit, our first take profit, and didn't even give us any sort of price didn't give us any sort of drawdown before dropping down, just straight downward movement to both of our take profit zones or pre-profit levels. So I hope you enjoyed the video. See you on the next one.